retroactive stimulus checks for dependents, proper income tax reporting for gig workers, and meeting the qualifications for the latest student loan relief. We're talking about all of those topics and more right now. Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. I'm Andrew Shear, and this is Practical Answers, where I answer your questions about money and personal finance. If you've got a question, drop it in the comments down below. I'll respond in the comments section, and you may be featured in a future episode. Our first question today comes from JV. Any idea how someone who was a dependent in 2019 and then graduated college began working full-time and will file their own tax return for 2020 can get the multiple COVID relief payments that were paid out in 2020? JV, thank you for this awesome question. We all know that most American adults received a couple of stimulus checks totaling about $1,800 in the past 12 months. But if you were over the age of 18 and still listed as a dependent on someone's tax return from 2019, you didn't qualify for either of those checks. And neither did the person who claimed you as a dependent. You had to be under the age of 18 for that. But there's good news. If you were no longer a dependent in 2020 and you'll be filing your own tax return in the next few months, you might qualify for a special tax credit called the Recovery Rebate Credit. This tax credit, put in place by the CARES Act, allows you to claim any missing stimulus money in the form of a refundable tax credit. So if you really should have gotten some of that sweet federal stimulus money, it's not too late to make things right. By the way, if you're hearing that term refundable tax credit and you aren't sure exactly what I mean when I say that, check out my video where I compare tax deductions and tax credits. Link is down below. Our next question comes from Jose Garcia on my video about Joe Biden's tax plan for working families. Jose asks, this video is now 3 months old, so is this actually happening? I did my taxes on Turbotax, but have not submitted yet. I've entered my W-2 info and it generated a refund amount. Just curious, would Turbotax update my tax return once this goes into effect? Thanks, and I'm subbed. Thank you, Jose, for this great question and for being a subscriber. I encourage everyone watching this video right now to follow Jose's lead and hit that red subscribe button down below. That would make me a happy man. Anyway, back to Jose's question. In that video about Joe Biden's tax plan for working families, I talked about 3 separate tax credit proposals Joe made during the campaign. There was the Child and Dependent Care Tax Credit, the Child Tax Credit, and the First-Time Homebuyers Tax Credit. The simple answer is that none of these proposals have been enacted, and even if they were to be enacted tomorrow, they would not affect your 2020 tax return. So you don't need to worry about your tax return refreshing or updating if the tax code is changed right now. The year 2020 is done and in the books, as is the 2020 tax code. Should any of these programs be enacted, they could have an impact a year from now on your 2021 tax return, or they could be issued in advance as a direct payment to those who qualify. This is especially true with the First-Time Homebuyers Tax Credit proposal and because of the need to stimulate the economy immediately rather than in 12 months. Our third question today is from Jim Income, and it concerns proper income reporting on your tax return. Jim asks, I'm getting alerts from my affiliates from which I made money that I'm getting a 1099-NEC even for ones that didn't pay me more than $600. Do you think if I don't get a notice, I cannot report it on my taxes? Thank you, Jim. This is really a great question. Jim, of course, is talking about working as an independent contractor. If a business pays an independent contractor an amount greater than $600 in a single year, that business must submit a 1099-NEC form to the IRS for that independent contractor. NEC simply stands for non-employee compensation. If you own a small business or do any gig work, then you are without a doubt familiar with the 1099 form. If you get a copy of that form, it means the IRS got a copy of that form as well. And if you say on your tax return that you made less money than their records indicate you did, you can be sure that'll generate a red flag in their system, and there's a decent chance they're going to want to get in touch with you to get to the bottom of it. Now, if your neighbor paid you $25 to cut their grass while they were on vacation, or your buddy paid you $50 to help load up a moving truck, I don't think you need to worry about listing that income on your tax return. But if you're operating a legitimate business, I think you need to have things organized, with all of your business income going into a separate business bank account and a clean set of books. And that means reporting every bit of income from every customer or affiliate, regardless of the amount. You might feel differently, but it really bugs me when the numbers in my books don't match up with the numbers on my tax returns. If the company who paid you doesn't issue a 1099 form, then you might be able to get away with it. But if you ask me, I'd just play it by the rules. Doing so helps me sleep better at night. Next is a question from Shay K on my video titled Filing Taxes for the First Time. Shay lists out the 3 options I presented for filing your tax return and then asks, when it's sent by email, that's when you should download it, print it, and fill it out by hand? Or can you just do it online? Tax software? How would one hire a tax professional? And the inclusion of your Social Security and Medicare? I'm still trying to figure out how you pay too much or too little. With the refunding and paying the IRS, I'm still very confused. Sad face. Shay, don't worry. It sounds like you're doing this for the first time and you're feeling a little overwhelmed. That's totally normal. Let me break it down for you in more simple terms that will give you some clear direction. During the month of January or in early February, the company or companies you worked for in 2020 will send you an income form, either in the mail or by email. That income form will state the amount of money they paid you in 2020. You don't need to do anything specific with these forms. Just hang on to them and don't misplace them. In February, after you've received an income form from each company you worked for, that's when you can proceed with either hiring a tax professional, which is someone who will prepare your tax return forms for you, or using the tax preparation software, which is the DIY option. Because it's your first time and you're a little overwhelmed, I would probably recommend the tax professional method, because they'll be able to hold your hand and walk you through the entire process. To find a tax professional, do a Google search for tax preparation services near and then enter your zip code, and you should see a bunch of different options. They'll usually charge $50 to $150 to prepare your tax return forms, and all you'll need to do is add your signature when it's done. If you want to try the tax preparation software, I recommend using Free Tax USA. It's completely online and should cost less than $15. Depending on where you live, it might even be completely free. Finally, once your tax return forms are prepared and filled out, either by the tax professional or the software, you'll add your signature. That's when you'll find out whether you owe additional taxes or if you're going to get a tax refund. Hopefully that makes the process a little easier to understand. Thanks for the question. Our 5th and final question today comes from Tina Michelle on my video about Joe Biden's first actions on student loan relief. Tina writes, "Thank you so much for this video. I used to have subsidized and unsubsidized Stafford loans, which were consolidated into 2 FFELP loans now serviced by Navient. I have already repaid 2 times the initial amount borrowed, but still owe the equivalent of what was originally borrowed, for a grand total of 3 times the initial amount borrowed by the time I'm a senior citizen. Sad face. Is there any way to consolidate these FFELP loans to take advantage of whatever might be coming from the Biden administration?" Tina, thank you so much for this awesome question, and I am really sorry to hear about your situation with these loans. I can tell you're getting tired of them just hanging around for such a long time. If your loans do not have a 0% interest rate and a $0 minimum monthly payment right now, I think it would be a good idea to look into the direct consolidation loan with the Department of Education. The direct consolidation loan would qualify for the $0 minimum monthly payments and 0% interest in effect until at least September 30th of this year. That would give you a good opportunity to eliminate a good chunk of that outstanding principal in the meantime. And it may make you eligible for any additional relief that is offered, like the possible $10,000 of student loan forgiveness you might have heard about in the news. FFELP consolidation loans can qualify for the direct consolidation loan under certain circumstances, and it seems to me that the best way to find out for sure would be to submit an application. But regardless of what you might qualify for, I feel the most important thing you can do right now is figure out a way to earn some extra cash and get this thing paid off once and for all. Don't sit around waiting for the government to do it for you. Do you have a question about money and personal finance? Leave me a comment below and I'll answer it. If you liked this video, you might be interested in the previous episode of Practical Answers. Click right here to watch. And if you're not already a PPF subscriber, then click right here to hop on board. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.